I would like to dedicate this video to Mr. Pramod Namdar. Here is the email. He says that, Hi Rohit, it would be great if you could make a video on how to identify the sectors which are in strength currently. This will increase our probability in picking the right stock in any given market condition, and our focus thereby will be only on those stocks picked from the positional scanner whose sectors are in good strength. Now let's deconstruct this email. It would be great if you could make a video on how to identify sectors. Now he's talking about industry groups. So you go to industry groups link. Okay. So this is industry group rank from one industry group rank till 197. Okay. The best leading stocks of the past have come from the top 40 industry groups. So you should focus your research on top 40 industry groups. So in my filter, what I have done is you see this group rank less than or equal to 100. So what I am saying is if the industry group rank is 1 to 40, 1 to 20 is great because that shows strength. This strength is coming from previous 6 months performance. So Market Smith is dividing the entire uh, market into 197 industry groups, and the top half is 100, the bottom half is roughly 100, so 97 industry groups. Market Smith is looking at the 6 month performance of the entire industry and then comparing one industry with all the other 196 industries and then ranking them based on performance. So 1 to 20 rank is great, 21 to 40 is good. Beyond 40, there is a problem. So, what I am saying is if you stick to the top half of the industry groups in terms of performance, if it's beyond 40, fantastic, because history has proven that the best leading stocks of the past have come from top 40 industry groups. But if it falls between 41 and 100, then you have to check the movement of the industry group rank, whether it is improving or whether it is declining. So let's go to, let's say, 74. Okay. Now you see here 6 months ago, the industry group rank was 67, now it's 74. So not only is the industry group rank more than 40, which is not good, but it's also worsening. It's gone from 67 to 74. But look at this. This is machinery tools, 77 industry group rank, but 6 months ago it was 158. So that means it has improved, correct? So if the industry group rank comes in the top 40, you are looking at the best outperforming sectors or industry groups. If it is between 41 and 100, then you will have to check the movement of the industry group rank. If the rank is improving, we might still consider that sector and we might still consider the stocks inside the sector. To compensate for this risk, because it's 77, not less than 40, to compensate for this risk, you might want a stock with a high relative strength rating on the price. So that is the answer to the first question, which are in strength currently. This will increase our probability in picking the right stock in any given market condition. Now, this is wrong. You can't buy any stock in any given market condition. So let's say if the market condition is, let this open, this gives you the market condition. Okay. We open the home page. Yeah, see, if you scroll down, no, it's not showing market condition. It's taking time to load. But anyways, you know that there are four market conditions: confirmed uptrend under pressure, rally attempt, confirmed downtrend. In a confirmed downtrend, he is saying in any market condition, no, in a confirmed downtrend, you are not allowed to take fresh positions. In uptrend under pressure and rally attempt, we are not allowed to take swing trades as per the orange trading framework because it is too risky. In a confirmed uptrend, we could take swing trade and a positional trade. So any market condition is not the correct statement. Okay. And our focus thereby will be only on those stocks picked from the positional scanner. So now he's talking about positional scanner. So this scanner, this is evergreen scanner. Okay. Now he is saying that this is a positional scanner. This is again a wrong statement. This is not a positional scanner. This is a basic filter which incorporates fundamentals to a certain extent. But there are a lot of stocks in this list also which don't meet at least 7 out of 12 of our fundamental criteria. So they are not strictly positional stocks. All the stocks that come in this list are not positional stocks. They come very close to being a positional stock, but they might not be, because if they don't meet at least 7 out of 12 of our fundamental criteria, that is a stock which is a candidate for a swing trade, not a positional trade. So this scanner is not a positional scanner. I have given my name here. I have not written positional here. So if I deconstruct this statement, any given market condition, this is not correct. Positional scanner, not correct. Whose sectors are in good strength. So what you could do is, you see these sectors. Yeah. So top 40 sectors, if you just pick, let's say, if I open this, you look at the chart of the sector, that will give you an idea as to whether the sector itself is in a confirmed stage to uptrend or not. But this is less relevant. I don't look at this. You go to stocks and I look at top 5 companies in the sector. Okay. If I limit my research in the top 5 companies in the sector, that means there are 40 industry groups or sectors, 40 multiplied by 5. So that's 200. 200 stocks is a very long list for us. I mean, how many stocks do you want to hold in your portfolio? 200 is a good enough list. Moreover, I am expanding that list 200 because sometimes what happens is the entire market cap of a sector is very tiny. So, for example, you look at the market cap of this sector, the leader is 5,000 crores. But when you go to the IT sector like Infosys, TCS, the market cap of one company is in lakhs of crores. So this sector is nothing compared to the IT sector, right? So that is why I have looked at the top 100 industry groups, the top half of the industry groups, where those industry groups that are small, that might not anyways come in our research. Even if they come, we may not be taking big position size on such sectors. Now, for example, if this stock comes in your, now this is 5,000 crore market cap. It's like a small, it doesn't even come in the CNX 500, right? Even if you were to put money in this stock, you might want to control your risk given that it's a very small company. Okay. So that is why I've expanded that list to top 100 industry groups to focus on. So 100 industry groups multiplied by top 5, the market leaders. Why do we look at market leaders in terms of market cap? Because if I'm a fund manager, if I want to put money in this in a particular sector, where do you think will I put my money? I'll put my money in the top 5, top 3 stocks, right? And the fact that they have put money in the top 3, top 5 stocks, that is the reason why they are in the top 5, right? Otherwise, if money was not coming in that stock, how would it come in the top 5? So the money has already come in that stock. So that stock is already in demand. So that is why I look at top 5, which is a rough estimate of market leadership within that sector, or sector leadership, we could call it, rather than market leadership. Okay, so now you have 100 industry groups multiplied by 5, that is 500 stocks. That may not necessarily represent CNX 500 list, but that's a big enough list for you to pick 1 or 2 stocks that you might want to take a position in, right? Even if you get 1 or 2 stocks in a week, that's like 52 to 100 stocks in a year that you are buying. That's more than enough for a swing and positional trading strategy, right? So 500 stocks is good enough list to choose from. Anyways, our Indian market, most of the market cap is concentrated in the top 50, top 500 stocks only, even though there are 5,417 stocks, BSE and NSE combined. Right? So that is my little take on this email. Good email, but the understanding needs to be more refined. We need to be more specific when we talk about this. So that's why I gave a very specific answer to the question. Thank you so much.